Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have a very special guest for you today. He's an industry thought leader, a tech innovator, an expert at driving brand adoption and distribution. Please help me welcome Steve Schachter, president of Sourcepoint. Steve, welcome to the show.
Great to be here, Michael. Thanks much.
Well, it is great to have you, Steve. You have a wealth of knowledge, but before we get into all of that cool financial knowledge and expertise, you have a very unique background where you started your career, and I'd love to kind of talk about that, see if there's some parallels between the mortgage industry and that. Why don't you share with our guest a little bit about your background, and then we'll start our discussion.
Sure, Michael. Thanks for asking. I do get the question from time to time, how does someone who started in the wine and spirits industry find their way into the U.S. mortgage industry? And I have to say, it probably took a glass of wine or two. And it took me a while to really think about it. And I won't go through all my background, but if you think about our industry, U.S. mortgage, perhaps the most regulated industry in the U.S. If that's the first, the second most would be the wine and spirits industry. They're both built on structures which are state specific. You've got laws that are very different state by state. You've got regulators that look at things very differently. And overall, and then the other thing they're very much three-tiered systems, which separate the consumer from, I would say, the main marketer of products, and then to brand owners. So you've got this three-tiered system. In U.S. mortgage industry, we also have capital markets, which really represents that third tier for us. In the way I think about it. So there's some really interesting parallels. I certainly learned a lot by being part of it. And I think one of the things I really took a lot from is the importance of having a very close consumer bent on everything that you do, but recognizing that businesses really have to work closely together in order for the consumer to ultimately benefit. So it's a great business to business situation, but it's also a very strong consumer, business to consumer. So there's quite a bit of parallel that I get to draw on almost every day when thinking about our business now.
Well, and I love that, and that background is so refreshing. You know, we can laugh and say, okay, the wine and spirits background, what do they have in common? But when you really start drilling down and start saying, okay, from a regulatory perspective, from a uniqueness from going from state to state, there really are a lot of parallels. And I can see how that expertise and understanding how to drive brand adoption and awareness and the different distribution challenges that you had are still very prevalent here in the mortgage industry as well. So this is going to be a fun discussion. I look forward to it. You know, you've got Sourcepoint. You know, you guys are kind of considered a technology-enabled mortgage services company. You know, does that mean you consider yourself a fintech, or more broadly, you know, how do you view fintechs in the mortgage industry? Let's talk tech. Let's talk fintech and really kind of see where you see Sourcepoint positioned in that whole wheelhouse.
Great question. And our company is unique in our history. Many people knew that that when First Source acquired us in 2016, we were split. Originally, the company had a large tech stack. We split apart our services business. And that was what First Source acquired. And we built the business that way as a services company. We're very much now what I would call a digital first organization. When we're working with our clients, we're constantly thinking about how do we work together to get the very best outcome for the client, for the consumer, for the staff at the client organization, for our folks. And you have to think digital first in the way the business is is organized now. We have found, and historically we started as being very much technology agnostic, meaning that we're a partner who can work with their core operating systems, which is typically the fintech world, which you're very familiar with. They're usually partners that plug in. Either they're going direct to the consumer, disintermediating the current environment, or they're working very closely to make those core systems work better. And that's very much what we do. So we have to be, in my mind, we start off as very much as an agnostic bent. Now, what we've evolved to over the last couple of years is, number one, how do you make, if there's a gap in the industry, how do we help close that gap and develop our own tech stack? Like we've done in the post-closing space, we introduced what we call post-close DLX, or digital loan experience post-closing DLX. But that was where we saw a gap, because you've got such strong origination system players, such strong servicing systems out there. There's always been this gap in between. So we've worked closely with our clients, with some of the other major technology providers to help close that gap. And I look at that as a developing financial technology ourselves. We also believe in partnering with, there's great technology out there. You don't have to make it all yourself. If we can be a partner, can help bring, because of our client base, we can help introduce another system to create an outcome for a client. Right now we just recently partnered over the last year with a really strong, what we call, it's a learning platform. We brought to market as First Learning Intelligence, and this is one where we're working every day to help make an associate come up the curve, learn become really skillful in the work that they do, become masters at a much faster pace than they would through the traditional learning systems.
Well, I want to get to that in a second. As you talk about learning systems, I got a lot of questions for you there. But before, you had mentioned digital, right? And a digital first approach. And I hate to say how long I've been in the mortgage industry. Let's just say 20 plus years.
Sure.
And it's not always about the technology, but digital adoption has been somewhat of a slow, laborious process. Where do you think lenders are now in today's day and world of adopting more digital? And do you think the pandemic and COVID accelerated people's acceptance of more digital tools and principles?
Well, on the second part of that, absolutely. The world that we're operating now has completely changed. The ability for us to collaborate from anywhere, having multiple people work together to get a loan completed, to get a loan originated, to get that loan completed, to transfer it. I mean, so there's no question that out of necessity, we've gotten to that point. I think that and I think, really listening to a few of your other segments, Michael, and you've had some great guests on. You've got some great guests. I've learned a lot through that.
Well, thank you.
Absolutely. One of the things that came to mind is that there's so much promise with fintech. And what is that promise? I think it's the ability to think about the costs of technology and think about the cost for running your business and having that cost perform like an investment rather than an expense. And
I love that aspect of it because, you look at it, you can look at a lot of different industries and see how much tech has driven down the cost of a good or a consumer good or a printer or whatever it may be. But you look at the cost to originate a loan, it's not dropping.
It hasn't.
I mean, we can have the greatest tools out there. We can have this next shiny object and this great tool and this imaging and AI. And I've had a lot of guests on, like you've mentioned, that are doing a lot of incredible things, but it still hasn't really driven down the cost to originate a mortgage. So I'm hoping digital and some of the things that you're talking about can help get us a lot closer to being able to accomplish that.
Well, and that's the promise of fintech. Let's not kid ourselves. If you're spending $1 today and you're making an investment in bringing another technology in, you're not expecting to have to continue to spend $1 plus. You're actually expecting to get a much more. I mean, again, every business sets its own bar for required rate of return, but that additional expense has to drive a better outcome. So that's the promise. I think that's one of the things that we absolutely focus on. We try and make our business operate like a fintech, even though we're a technology-enabled services provider. We are continually thinking about what are we doing that's making when we work with a client, the work that we do perform like an investment and not just another expense line.
Excellent. Hope everyone's taking notes. Make sure you guys are jotting down notes. Steve has so many good things to share. Let's talk a little bit about M&A, right? Yeah. You guys recently had an acquisition of the Stonehill Group. Tell me a little bit before we talk about Stonehill and kind of where does that fit in, but what's really your approach? What's your thesis to acquisitions and M&A as you look at the marketplace and where things are going?
Well, I think this is going to be an incredibly exciting time for our industry. There's a lot of terrific companies. You've got a market that certainly that I think we're all seeing some amount of consolidation as the market shifts, which is going to create opportunities for companies to really rethink, to look at their business strategy to a certain extent, but also go back and say, who are we, how are we going to grow? Do we want to grow? I mean, you can question that. Not every, in the last few cycles, there's companies that have taken the opportunity to maybe hunker down a little bit and then just be prepared for the next, prepare for the next opportunity in the marketplace. Our company, our parent company, we have always been growth focused. We've got a growth mindset. Everything we do is thinking that way. Up until our acquisition of the Stonehill Group, we had always been we'd always been growing strictly through what I would call a de novo or organic approach.
Okay.
So this was the first opportunity that we had where we felt there was a terrific fit to do two things. Number one was look at an organization that's been in the industry for 25 years, terrific reputation, certainly the leader in the QC space, had recently gotten into, opened up a due diligence practice about 2 years ago and really has done great things in that space. And we know how much activity there's going in the MSR trading area and some of the other new loan types that are coming out. So due diligence is certainly an important part of that. So the thesis comes back to, and why, you firstly have to say, are we doing this out of growth? Are we doing it because we're trying to identify an underperforming asset that you can turn around, so a turnaround play? Or is it just, hey, two organizations, they want to take cost out, so you bring them together and you can take cost out? For us, we're believers in growth, so this is not a turnaround. It's not a cost out play. This is truly adding to the things that we do, bringing new services and offerings to our client base. So it's a growth play for us.
Fantastic. And like you said, they have so much domain and subject matter expertise and incredible reputation in the industry that I can really see where there's some great synergies. All right, well, we're 45 days or so into 2022. It's hard for me to already say that. I can't believe we're that far into it. It's going to be a different year. It's shaping up than the last 2 years. 2020, COVID hits. Everyone doesn't know what's going to happen, and volumes go through the roof. 2021 was people kind of caught their breath a little bit. but there were still very robust volumes. Things are now shifting. Kind of, what is your view, and how do you plan, and how do you help your organization plan for these changing market conditions so that you can bestow that knowledge and expertise as it shifts to your customer base?
Yeah, thanks, Michael. I do know this is that I don't have a crystal ball. None of us do. I think it's pretty clear the direction that we're going and the market's going, and I think when we look forward, we look at the year ahead, 2 years ahead, is we say, number one, you have to have a long view in our industry. That's the first thing I always remind our team. We've been at this for 10 years. Even longer than that as an organization, and every year and we just see we've had such a terrific long-term growth trend even through a few cycles now. So the first thing is you have to make sure you're in it for the long view, and you plan and you're committed to that. And if you're not, then this might not be the right industry for you.
Right.
The second thing, I like to make sure that we do this at least on you're not doing it every month or every quarter, but every probably 9 months, 6 to 9 months, we go back and we look at what's the core of our business strategy. And I always encourage other leaders that I have a chance to work with, spend time with, is vision never changes. But strategy, from time to time, you want to make sure that what you set out for still is number one, is it still relevant in the current market? And number two, does that strategy resonate because as a market shifts, and certainly when it shifts dramatically? I think everything that you do here with in talking about fintechs is all about looking at companies that are continually coming in and are changing the face of what's going on in our industry. And they're coming in with there's a lot of people with great ideas, things that none of us thought about 3 years ago, 5 years ago. So when change like that can occur as quickly as it can, is your strategy still makes sense? And are you able to adopt, to update it and shift, so is your organization agile enough and ready to move? And the only last thing I would say is that we see it often, and our industry is known for it, is when things start to shift, the first thing people want to do is adjust price, work on price. Ultimately, you have to realize that you cannot give the house away.
Yep. So many people do that. I think that price is such an interesting point that you just made, because so many people think as market conditions shift, we've got to do this, we've got to lower that. And if you don't understand your value proposition and what you're bringing to the market and to that specific client, that's like putting an anchor on your foot, and you're just going to go down faster in changing market conditions. Steve, you have so many good insights. You and I could talk for hours on this. A couple things I want to ask. For people who want to find out more about Sourcepoint, what's the best way that they can get a hold of you guys? How can they set up meetings? Are there industry events that you'll be at? What's the best way for them to get a hold of you?
Sure. Thanks for asking. Our website, www.sourcepointmortgage.com. Feel free to go there. You can connect to me there. You can link to me through LinkedIn. Reach out with a message that way. I'm always looking to make new friends. But there's a lot of information on our website and also on our homepage within LinkedIn are two great places to look.
Excellent. And as we're winding down, I love getting a little bit more personal interaction, and we got a chance to talk a little bit before this, but do you have a favorite book? Do you have a movie? Do you have something that really drives a bit of advice you'd like to share? Now's the floor is open. I want to open it up to you to say, okay, what is that book or movie that had that impact for you?
Well, I'll just say recently I rewatched daughter was home over the holidays, and we rewatched Queen's Gambit. And
Okay.
I admit, obviously it was a fascinating movie, great character study. But the thing that just reminded me the most was that there's hidden talent all across our world. You never know where the next genius or the next genius is going to be, and which reminds me all the time to be making sure you're just not looking in the places, the usual places, to find great people and people who are talented who can do something for your business.
Oh, that is great advice. For those of you who haven't seen it, go watch the movie, but more importantly, focus on what Steve just shared. We can find talent. We can find incredible people across the world in all different settings if we just have an open mind and we're looking for that. Steve, thank you so much for being a guest on this episode of the Fintech Hunting Podcast.
Thanks, Michael.